Hey everyone, welcome back to my channel once again. This is Abhishek, your friend but not a financial advisor, and today's video is about one of the best growth stocks to buy now, which is ViacomCBS. So yes, this video is about ViacomCBS detailed analysis and prediction. So without further ado, let's just get right into it. But before we jump into the video, I would like to welcome you guys to our amazing Patreons family where we talk about every investment instrument in detail with a complete due diligence, and that makes your work easier. So if you're interested to join our amazing family, the link will be in the description down below. Now let's move on. So guys, the company which we are going to talk about today is ViacomCBS. I guess many of you guys already know it, but those who are not aware about this company, it is an American diversified multinational mass media and entertainment corporation, and their main properties include the Paramount Pictures film and television studio. So ViacomCBS basically delivers premium content to audiences across traditional and emerging platforms worldwide through television, streaming and digital content, studio production, publishing, live events as well, merchandise and many more things. The company is sitting at $44.16, which was down by 1.76% from the previous trading day on Friday, which was on July 2nd, which is good for us. The much lower the price, the much better the valuation will become, and we will see that in the end of the video anyways. So the market cap is sitting at $28.667 billion. The beta is 1.67, which is still high, but trust me guys, compared to this run up in the previous months and compared to this phase right here, it has come drastically down. So it is high, but compared to this, it is definitely not high, and this is what I like about this company now. The other attractive thing about this company is the forward dividend yield of 2.14%. So growth plus dividend, yeah, what else you want? But anyways guys, I'm not here to advise you guys to sell or buy anything. I'm not a financial advisor. Just take this video as a part of your own due diligence, and I'm sure this video could be really helpful for you guys because I have tried to put every piece of important information in this video to help you guys to understand what the company is doing and how the growth looks like. So moving on, then we have this 52-week range, which is quite crazy, $21 to $102 almost, and this was this phase right here, this run up, and this is the volatility which we don't want to see in our value investment. Of course, we want our stock prices to rise, but not at this exponential rate, because eventually what will happen is this. As a matter of fact, I want to see this steady growth, because this steady growth, a bit of consolidation, a bit of pullback is healthy, because that is actually appreciating the growth of the business. So this is in proportional to the growth of the business, and this is definitely a disconnection, because at this peak, I'm sure the market cap had a total disconnection from the actual business. So this is not what I want in my value investment strategies, but I would definitely want to see this type of steady growth. And this is the other thing which now I like about ViacomCBS, that the growth is now steady in the stock price and the movement is quite steady. So moving on to our next phase. So guys, now first let's look at the bearish case scenario for ViacomCBS, and then let's move on to the bullish case scenario. Okay guys, so the first bearish point regarding Viacom is their financial growth. So we can see right here that their revenue growth was already quite stagnant in the previous years, and this is also one of the reasons why analysts are quite pessimistic when it comes to projecting their future potential growth rate. And anyways, moving on, we can see that in 2020, the revenue growth actually declined by 6 to 7%. And guys, this decline in the revenue was basically because of the pandemic in 2020, which led to a complete halt in the film releases and cancellation or postponement of major sporting and entertainment events, hitting the company's revenue from theatrical releases and advertising. And this was noticed in the Q2 results, that the pandemic has really hit hard their revenue, and the revenue actually decreased by 12% year over year to $6.275 billion in Q2 2020. And this decline, like I said, was mainly driven by advertising revenue, which fell by 27%, while theoretical revenue was almost nil. So guys, the second bearish point is their streaming service platform, which is Paramount Plus, which is in direct competition with the biggest giants, Disney Plus and HBO Max. And this is the bearish point right here, because they are competing with the biggest giants who are in this niche since a really long time. And if they are depending upon this particular service for a good potential revenue in the future, then that could go sideways for Viacom, because they are really in a heavy competitive market which is already overcrowded at this particular time until 2021, which became overcrowded because of the pandemic, as people moved on to online streaming more, as there were no outdoor activities, and this actually helped Viacom if we see. But of course, this is a bearish point in my opinion, that they are in a highly competitive market if they are just depending upon this particular service for a high potential revenue growth. So the next bearish sign is, for me guys, the issue of common stock or share dilution. So as you can see, they have heavily increased their share dilution, and this is one of the biggest red flags in my opinion, because this is a silent killer. If the company is increasing consistently their shares in the market, then they are eventually diluting you. They are decreasing your value of the share which you are holding as an investor, and that really affects the valuation of a company, which many of the investors don't actually realize. They just see the margins, they just see the revenue growth, and that's it. But this is a silent killer, and this is a big red flag for me. Now, there are reasons for the company to do that, but which we will cover in the bullish case scenario. But I had to tell you guys that yes, they have done a heavy dilution, and that is one of the biggest red flags in my opinion. So guys, the last and the most important bearish point in my opinion is the total debt which they are holding, which is up to $19.3 billion with respect to the total cash position of $5.5 billion. Now guys, this cash position in itself is not a bad number at all. This is really good, but when you look at the total debt, then it looks pretty small. And this is my concern, that if the interest rates rise, then they will have to pay a hefty interest on their total debt, and this could create a really big problem if their forward cash flow, future cash flow is not increasing. And this might create a problem for Viacom and for the investors as well. So this is one of the biggest point of concern for me as an investor, that they are holding a really hefty debt. Okay guys, so now since we are finished with the bearish case scenario, now let's have a look at the bullish case scenario. So we already saw in the bearish case scenario that their revenue actually declined, but the only saving grace for the company was actually their online streaming business, which saw a really good growth. So in Q2 2020, there was a 61% increase in Pluto TV subscribers, while the subscriber base to other streaming platforms CBS Access and Showtime increased by a whopping 74% year over year, which led to a digital video streaming revenue increase of roughly 25% year over year, led by 52% growth in their streaming subscription revenue and robust growth in Pluto TV advertising revenue. But of course, like we already saw, that hit to its traditional business pulled the company's total revenue down. Additionally, profitability was also reduced, and so on and so on. So we can see here, guys, actually the bearish scenario, which was their online streaming business, proved to be a bullish case for the company. So this is how you can figure out if the company is making good decisions or not. And in this case, they did make a good decision back in 2019 by entering into the online streaming business. Doesn't matter if they were competing with the giants or not, but as we can see that their business, online streaming business, actually saved their complete traditional business in this case. So this is the first bullish case in my opinion. So guys, the other bullish point in my opinion is their strong performance in the Q1 2021 across their all key revenue lines, not just one but all of them, which is quite diversified and in my opinion is quite bullish. So as we can see, through advertising, they already had a growth of 21% in the Q1 2021 with respect to Q1 2020. Via affiliate marketing, they experienced a growth of 5%, and via licensing and other activities, they had a growth of 11% in Q1 2021. So in my opinion, what I can make an observation out of this is that we saw a decline in the revenue because of the lockdown. Yeah, everything was closed, there were no outdoor activities, theaters were closed, and the majority of their revenue comes from these things. And as soon as the economy reopens, I do think that they will get back on their feet and their revenue growth will increase, especially when they have already made a good progress with their online streaming business. And guys, since we just talked about their online streaming business, well, here are some of the key exceptional figures from their Q1 2021 earnings report. So global streaming revenue grew by 65%, their global streaming subscription revenue grew by 69%, and their global streaming advertising revenue grew by 62%. So what this tells me, guys? Well, when we discussed the bearish case scenario, we talked about that they do have huge competition, there are many big players in the market, and despite of having such a huge competition, they still managed to show this growth rate in one quarter. So this tells me that it doesn't matter how much potential or how much competition the other companies have, even in such situation they still can grow at this rate. So if we just assume that their growth rate declines a bit because the economy reopens, but then their growth rate will be shifting on to their key business, so it will be compensated for sure. But still, if they just manage to keep a 30 to 40% growth rate for their online streaming business, they really don't have to acquire a big chunk of this niche. Let the market movers do their work from the online streaming business, but they can do their work in a small area and they still could do really good. So guys, that brings us to our last bullish point, which are their quarterly results from Q1 2021. But this is one of the most important bullish points because that tells us how the company is actually performing and how the company might perform in the future as well. So we can see that their revenue grew by 14%, and this revenue was coming from diversified areas. The advertising was 2.6 billion, affiliate marketing was 2.075 billion, streaming was just 816 but grew by 65%. Theoretical revenue, of course, was in loss because there was a lockdown, and this is what I'm talking about. When this opens up, I'm sure the company will have a good amount of growth for sure. Just imagine, guys, the majority of their revenue comes from these two fields as well, and they are underperforming because of the pandemic. So just imagine if even if we say that streaming business go down to 30%, but this will contribute to a heavy chunk of their revenue, and this would definitely impact this growth right here. And I can imagine this to reach 30% easily when the economy reopens. So we can see the TV entertainment business grew by 19%, cable network business grew by 14%, filmed entertainment grew by 23%. So what this tells me, that the business is doing good. The business, yes, was in a really bad situation because of pandemic, because the majority of their business is coming from physical activities, theoretical activities, licensing and other activities as well. But due to everything being under lockdown, they had a really bad situation. And that brings us to the point of one bearish case scenario, which was sheer dilution. In that case, of course, guys, the company has to collect money via financial activities, and that is the reason why I can think of they did a heavy dilution to raise some capital, and that's why they also have a huge debt. So these are some of the reasons why I do think that the company did a heavy dilution. In the future, I do expect that the company won't perform such heavy dilutions when the economy reopens and when these businesses are picking up for them. So I hope that the company doesn't do dilution anymore. Yeah, once in a while a small dilution is okay, but it is good to see that the business is generating enough cash, enough money from their operational activities, and that is what we want to see in Viacom as well. They are generating cash from their operational activities, but we still see that they are in a heavy debt and they are diluting the shareholders. So these are the points which I do think why they did it, and this concludes our bullish case scenario as well. Now let's move on to the evaluation part of the business. Okay guys, so finally we are on the final phase of the video to figure out whether this is a value investment or not. But let me clarify one thing, guys. A company can be projecting a really good value because it might happen that in the current situation they have pretty good numbers, but it is not getting any interaction from the investors because there might not be any potential in the company in the future. Yeah, this could happen and people might get mistaken that okay, the company is projecting us with a really good value, so let's invest in, without figuring out how the future looks like for that particular company. So please keep that in mind, and this model is just based on my personal assumptions, so please, assumptions can vary from person to person, and these are my personal assumptions. So this is according to my personal opinion, because ultimately we are projecting the future growth of the company. So these are some of the key ratios which are quite important to know when we are evaluating a company. So price to sales is sitting at 1.09, which is quite good. Price to earnings ratio is sitting at 10, which is, compared to the market in this niche, is 30, so 3 times less, which is quite nice. Current ratio is sitting at 1.78, and price to free cash flow is sitting at 8.49. Current ratio tells us the company is not going anywhere in the next 12-month period at least, and this is quite a stable company. Now these are the cash flows which are from the Yahoo Finance. So until 2021 trailing 12-month period, I had the numbers, and these are the future projections. So basically I am taking a growth of just 3%. Yes, you might be surprised to see why I'm taking a growth of 3%. This is not just my assumptions, but this is from here. So the analysts are also predicting that Viacom will just have a growth rate of 3.3%. Now I am taking a really conservative approach, guys, to see that if we are undervalued or not. Okay, so this is just from this data, though I personally don't think that this will remain at this rate. But it's quite difficult to actually evaluate the media companies at this current moment, because we don't know how the future growth looks like. So that's why I am taking what the analyst has to say. So analysts are predicting that the future revenue and earnings could increase at a rate of just 3.3%, even though when they had a really good growth in the past. And as you can see, this pink is the free cash flow. So free cash flow is in line with the earnings, and free cash flow from operations is also in line with the earnings. So that's why I am being quite conservative in this case, and I'm taking a growth rate of just 3%. And my discount rate is at 10%, because this is what I expect. I expect a return of at least 10% in this case, and that gives us a present value of 37 billion, and this gives us a share price of $54.22, which still means that we have an upside of 22% from the current price of $44.16. And guys, this is from a really conservative approach. Okay guys, so now let's assume that we don't have a growth rate of 3%, but rather a much better growth rate for a steady business like Viacom. I'm not taking future prospects into consideration. I'm just playing with the numbers here. I'm definitely not going to take these numbers right here, or even the average of these numbers, because these are quite optimistic, and businesses might see such growth in 1 or 2 years, but this is not consistent. So let's take a steady growth for a steady business like Viacom, which could be around 10 to 15%. So I will take 15% for the first 2 years, and then I will reduce it to 10% for 2024 and 2025, and let's then see what is our share price in that situation, or the market value for Viacom. Okay, so here I will put 15% and just copy it onto this cell, and here I will put 10% and 10% here as well. So with these assumptions, we will get a share price of $83, which means an upside potential of 88% from the current price. But again guys, these are just my personal assumptions. I do think that Viacom has the capacity to increase at a much faster rate, more than 3%. So I do think that this, okay, maybe not 15%, but even if it grows at a rate of 10% next year and in the coming years, we still might have a good upside potential in this case. So these are just my personal assumptions, guys. So you can of course put a margin of safety as well, 10 to 15%, and that would still give you a buy price of, let's say, intrinsic value of $60 or something. So you can still have an upside potential of over 30% in this case. But again, we have to see the future prospects of the business as well. The business is definitely not going anywhere, but we should see that if we have better investments than this or not. So guys, in the end, just to summarize my thoughts on ViacomCBS, so my final verdict would be yes, I would be keeping some money aside for ViacomCBS, because even with a growth rate of 3 to 5%, which the analyst predicts, depending upon the current performance of the business and some historical performances, still we have an upside potential of 20 to 30%. And if the economy reopens and if the business performs much better than that, then like we calculated, we can have a maximum upside potential of even 80% on this business on our investment. Yes, there are many other businesses out there which are highly undervalued and are better performing than ViacomCBS, but in the end, guys, it's your ultimate decision. My decision would be yes, to keep some money aside for ViacomCBS. I'll be keeping a strong eye on the quarterly reports and the earning reports to see that if they can perform at par with the analyst predictions or much better than that, and that will give me a much better idea for ViacomCBS. Your strategy should be not to just invest and forget about a stock. Then better is that you should be just putting into ETFs. You should be reevaluating companies now and then, depending upon how their annual results or quarterly results are. Of course, you should keep an eye on them, and same I would be doing with ViacomCBS as well. Of course, I am a bit skeptic about their debt, high debt, but like we discussed, that they took this amount of debt to just survive in this pandemic, and they actually survived. So I do think if their cash flow increases, then they would be able to just finish off their debt. I don't know when, how long it will take, and when it will be finished. That is a negative point for me, yes, but I still think that they can perform better, and I would definitely put some amount of money into ViacomCBS. So that's it, guys. That's all for today. And if you like this video, then don't forget to hit that like button and subscribe to the channel if you haven't subscribed it yet. And I will see you in the next one. Until then, stay safe, stay healthy, and ciao.